Get ready for the market action, because IREN shares have dropped nearly 9% following Friday's intense rally. We dive into the details of this major move as we look at the landmark AI cloud partnership IREN announced with Nvidia and what that means for the future of high-performance computing.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we look at the massive investor interest surrounding Nvidia Corporation. We break down what the latest data from Zacks reveals about earnings estimates, the Zacks rank, and why this chipmaker remains a powerhouse in the market right now. Then we shift focus to the sheer scale of Nvidia's commitment to the AI revolution. We examine the staggering $40 billion Nvidia has pumped into AI partners in 2025, including the massive investments in IREN and Corning, and what this signals for the entire industry. Finally, we wrap up with the broader market reaction. We see how Nvidia and chipmakers lifted stocks across the board, defying war jitters, and what analysts are saying about the future of earnings-led market momentum. Stay with us for the full breakdown. Shares of IREN plummeted approximately 9% in early Monday trading, settling at $55.83, marking a significant pullback from Friday's surge. This correction follows an 8% rise to $61.20 on Friday, which was spurred by a landmark AI cloud partnership announcement with Nvidia. Profit-taking appears to be the primary driver as investors take gains following the parabolic run, despite IREN stock still being up 66% over the past month. The catalyst for Friday's rally was a substantial deal. IREN announced a $3.4 billion AI cloud contract with Nvidia, coupled with a $2.1 billion share purchase option for Nvidia with a 5-year exercise window at $70 per share. This move signals a strategic pivot for IREN, moving focus from legacy Bitcoin mining to high-performance computing and AI infrastructure, with the company aiming to deploy up to 5 gigawatts of computing capacity. CEO Daniel Roberts characterized this as a pivotal moment, positioning IREN as the partner for building the world's leading AI infrastructure. However, the bullish momentum is being tempered by sobering financial results. IREN reported a net loss of $247.8 million on revenue of $144.8 million, accompanied by a 34% quarter-over-quarter decline in Bitcoin revenues. This tension between long-term AI economics and the contraction of its legacy business is fueling bearish sentiment. Adding to the strategic diversification, IREN also announced the acquisition of Nostrum Group, which injects 490 MW into its power portfolio and opens access to the European market. Management projects annualized recurring revenue of $3.7 billion by the end of 2026, with $3.1 billion already under contract. Despite the long-term vision, execution risk, and the immense capital required to scale to gigawatt-class AI infrastructure remain significant concerns, as highlighted by multiple analysts. The consensus analyst price target currently stands at $71.15. The market debate is sharply divided. Bulls view the pullback as a buying opportunity into the transformative partnership, while bears cite the Q3 net loss and scaling costs. Sentiment data reflects this split, showing a neutral composite score of 45.86, with social media chatter leaning bearish. Investors are advised to monitor key levels. Holding support at the mid-$50s is crucial, with a close above Friday's high suggesting the Nvidia catalyst retains strength, while a slip toward the 50-day moving average near $43 indicates deeper consolidation. The immediate trading activity is best interpreted as a digestion period following a sharp move, with prudence suggesting investors wait for further clarity before making long-term conclusions. Nvidia Corporation, NVDA, is currently dominating investor attention, appearing on Zacks.com's list of the most searched stocks. The company, a key maker of graphics chips vital for gaming and artificial intelligence, has demonstrated significant recent momentum, with its shares rising 14.1% over the past month, outpacing the Zacks S&P 500 Composite's gain of 9.1%. This surge is also reflected in the semiconductor sector, which has seen a 24.8% gain during the same period. Determining the near-term trajectory of NVDA hinges on fundamental analysis, prioritizing the revision of future earnings projections over market rumors. Analysts' adjustments to earnings estimates are crucial, as an increase in these projections directly correlates with higher perceived fair value, driving investor interest and stock price appreciation. Key earnings indicators point to robust performance. Nvidia is projected to report earnings of $1.77 per share for the current quarter, marking a year-over-year increase of 118.5%. The consensus estimate for the current fiscal year stands at $8.07 per share, reflecting a year-over-year growth of 69.2%, with recent estimate revisions showing a slight upward trend. Looking ahead, the consensus estimate for the next fiscal year is $10.84 per share, signaling a projected growth of 34.3% compared to the previous year, with recent estimates showing a 2.7% upward revision over the last month. Revenue growth is equally compelling. The consensus sales estimate for the current quarter is $78.75 billion, projecting a year-over-year increase of 78.7%. Reported revenues for the last quarter reached $68.13 billion, representing a year-over-year increase of 73.2%. Notably, Nvidia has surpassed consensus EPS estimates 3 times over the last 4 quarters, and topped consensus revenue estimates each time. Utilizing the proprietary Zacks-Rank tool, which integrates earnings estimate revisions, Nvidia has been assigned a Zacks-Rank 2, indicating a buy rating and suggesting potential outperformance relative to the broader market in the near term. However, valuation metrics suggest a premium. Nvidia is currently graded D on the Zacks Value Style Score, indicating it is trading at a premium compared to its peers. Investors must weigh these strong growth indicators and positive analyst revisions against the current valuation to make a fully informed investment decision. Nvidia is aggressively cementing its dominance in the artificial intelligence landscape, pouring over $40 billion into AI partners in 2025 alone. This massive investment strategy solidifies Nvidia's position as the preeminent backer of the AI industry. Recent high-profile deals underscore this commitment. This week, the chipmaker secured rights to invest up to $2.1 billion in data center operator IREN and up to $3.2 billion in fiber optics specialist Corning. The cornerstone of Nvidia's strategy remains a substantial $30 billion stake in OpenAI, supplemented by further investments in key players including Anthropic, xAI, CoreWeave, Nebius, Marvell, Lumentum, and Coherent. Nvidia CEO Jensen Huang has publicly stated a broad strategy, emphasizing that the company aims to support all foundation model companies rather than focusing on selecting single winners. However, industry observers are pointing to a pattern of circular investments within these deals, particularly involving so-called neocloud providers. This pattern is interpreted by some analysts as a form of pre-financing for the eventual sale of Nvidia's own high-demand GPUs. U.S. equities resumed their advance on Monday, driven by strong earnings reports that prompted Wall Street strategists to raise full-year targets for the S&P 500, despite ongoing geopolitical tensions related to the Iran conflict. The S&P 500 gained 0.2% at 11:19 a.m. in New York, with the energy and materials sectors leading the charge. Nvidia Corp was the primary contributor to the index's rise, fueled by sustained strength in the chip sector, alongside strong performances from Qualcomm Inc. and Micron Technology Inc. The Nasdaq 100 also edged up 0.1%, while the Dow Jones Industrial Average offset earlier declines. Despite lingering concerns about the duration of the war, market sentiment remains relatively stable, with some analysts believing a ceasefire agreement is still on the horizon. Crude oil prices climbed on Monday, with West Texas Intermediate oil nearing $100 a barrel, while the SIBO Volatility Index remained around 18. Market strategists acknowledged the extreme uncertainty of the geopolitical landscape, but noted that investors are continuing to look past these issues. The surge in the market is largely attributed to surprise first-quarter earnings, which have led multiple Wall Street strategists to revise their forecasts. CFRA increased its S&P 500 target to 7,730 points, citing resilient consumer spending and AI investment. Yardeni Research, Inc. now holds the highest Wall Street estimate, projecting the U.S. benchmark to close the year at 8,250 points. Ed Yardeni noted that the rapid rise in consensus earnings expectations has triggered an earnings-led market rally, drawing comparisons to the 1999 tech stock melt-up. However, caution persists. Some market participants have expressed concerns about the sharp climb, with one analyst suggesting the market has jumped the shark. Furthermore, fears surrounding elevated oil prices and potential shortages could derail the rally. Morgan Stanley warned that the oil market is in a race against time, highlighting concerns over potential sharp price increases if the Strait of Hormuz remains blocked. Traders are also monitoring upcoming economic data, including disappointing April home sales and pending inflation, producer prices, and import retail sales reports. Traders are also awaiting a potential meeting between President Trump and President Xi Jinping later in the week.